recording. Here we go. Okay, so good evening, guys. Ken at Taurus Capital. It is the nightly strategy podcast for June 18th, 2020. Let's see what happened today. Okay, so we had almost an inside day today. We had a slight gap down, and then there was a grinding upward day that closed pretty well, but everything is stuck still inside the boundary of the dragon. The RL10, the 10-period regression line, is still steep down. One more up day, like a white candle day, and this should start to roll back up. So that is about the only positive we could see today. Today, all of that grappling, all that street fighting, only fought its way back to where it closed yesterday. So that was kind of faint praise today. And then none of the news anywhere looked favorable. Washington's ablaze with this Bolton book that's slamming Trump from the inside. That's not going to help. Biden is staying out of the news. That's good for him. There's enough speculation on who his vice presidential candidate's going to be, which is really who our next president's going to be when he wins in November. I don't see how Trump digs out of this hole with no allies. The Republicans will consider it a victory if they can just hold on to the Senate. Well, our dragon is still sideways, and his slope is flattened out and has a nice wide support range at 316.55 and then 309.58 on the downside. And that held support today just barely. When it gapped down and then reversed, that was right on the edge of the daily dragon, so it did its job and held today, but a very narrow range day. And so I guess that would be the other favorable sign, is that there was no follow through on the panic selling. So if anything, the previous PSAR level that had held during the peak of all this gain, the previous PSAR level at about 310 held. So maybe that's, again, some faint praise and possibilities there. To the upside, we're looking at the spine of the dragon at around 313.3-ish, I would say. That the high of the week is just a little over 315. The top skin of the dragon at 316.55. The PSAR at 321.40. That's the PSAR flip. You'll notice, and then the 10-day high and the 30-day high up here at 323.66. The Z2 line is now up at 324.90. So as we traverse back to the 10-day high, happened 9 days ago. The 10-day low down here at 296.76, a fraction below the fair value at 299.56. Bollinger Band mean 302.01. So this little, I guess this would be a pennant or a flag or some such. That support level 309.5 has really got to hold tomorrow, or this could really be a disaster. It was a failure to follow through to the upside today, and also failure to fail further. So this actually sets up the best of all possible worlds for a mechanical entry. So if we were to frame this trade in two different directions, we would see the 10-day high target at 323, is $10 away from the high of the day. So it's $10 to the upside. Then if it broke down from here, that's $10 or so, maybe almost $12 down here to the 10-day low. So you have that very narrow doji range right smack in the middle of the 10-day range, right in the middle of the dragon. So there's a strong argument for a sharp move in either direction. So that's where having a non-directional bias will really be helpful to you. We're still well into the fall. We're now like, let's see, 1, 2, 3, 4, the fifth day in the fall. So we still have an upward bias, but it is cautious. The risk Z is still in the negative territory, so that's cautioning against swing trades. We're so near to the sideways boundary that that's arguing against longer term swing positions. So this is really an intraday trade. So at most, like if you're using my allocation, or well, I'll just don't use my allocation, but in my allocation where I have 20% in my core, 40% in swings, and 40% in day trading, my 20% in the core is always postured in, so that's exposed. But none of my swing trade portfolio is exposed, so that 40% of cash is on the sidelines, and then I'm only using the 40% of the cash for day trading opportunities and taking selective targets. So I actually have a fairly low exposure right now because I'm not playing swings in either direction right now until this tension here in the middle resolves itself. We have the RL90 continuing to make gains. The river and the Bollinger Band mean still upward sloping. But we have the PSAR sloping down, the Dragon flat, and then only the RL30 has a slight upward slope to it. So this is a market that's really run out of steam and is really rudderless, with no energy one way or the other. This is waiting for leadership to emerge, either to the downside. And nobody in Washington wants to see a downside, really. I mean, if the Democrats are interested in arguing against the Trump economy, then they don't really want to see pain because that's going to trigger more debt, which they'll inherit. So they kind of like this failure to follow through and spinning wheels without causing too much pain and not requiring additional intervention. So this is actually in favor of the Democrats right now because the economy feels weak, the market is stalling, and that undercuts Trump's last remaining basis of support. So this is kind of that's the geopolitical issues that I see right there. Taking a look at what worked today. So we're down here in the S&P clawed its way back to just a fraction of a fraction, up 0.04. What was worse? So in the U.S. indices, DIA was down a fraction at minus 0.14. Looking for the Russell here. I guess it was up a little bit. Let's take a look at what was better. Emerging markets, materials were up 0.07, tech up 0.45, oil exploration 0.49. Treasuries up 1%. Some of the key tech leaders, there's Amazon, Microsoft, Tesla, Virgin Galactic all up. Devon had its little rebound finally. But pretty muted follow through today. There were no big runaway movers to the upside. To the downside, the Russell was basically flat too. That's what I was looking for. eBay flat. Financial slightly lagging. Japan slightly lagging. Healthcare and consumer discretionary down 0.35-ish. Intel, McDonald's, Wheaton all down minus 0.6. Cisco, Walmart, Twitter continued its slide. So in the story, way down at the bottom of the stack, U.S. Steel minus 13%. It was down minus 10% yesterday. I want you to remember that just a short while ago, this was 3 days ago, when I was bemoaning that I didn't buy it at 9 on the swing when I had a chance. because it went to 11.6. It's now down almost 30% from that level in 3 days at 8.15, down another 13%. And now it came out of the daily summer and has rolled into fall. It hasn't even triggered that one yet. It was down so much. But both U.S. Steel and Cliff were down large today, much worse than XLB. And so that's really a sign of individual company weakness. So I just want to go take a quick look at those two on the swing, because now when there's that much blood in the water, now I'm interested, like the little hyena that I am. Still. Yeah. So here's U.S. Steel. It was up there around 11 just a while back. I thought it was 11.6. It was 11. And now has tumbled all the way down from there to here and ended in that little doji on the bottom with a lot of weakness. So if I'm framing that, if it fails, where's the next place it's going to go? There's nothing to hold it until the first sign of support is way down here at the PSAR flip and the belly of the dragon. So that's at $7.35. So that's another 10% sell off right there. So at the first sign of weakness tomorrow, I'm all about that. But if it opens inside that yellow zone tomorrow and failure to fail further, I'll be ready to trade that frame going back north, because you can see there's a lot of people that own that at 11 and bought it all the way up here through 8 to 10. So as a tactical trade, I just absolutely love that one. So that's kind of a special case, like a max pain range compression, we would see that one. Cliff Natural Resources, since we're in there, has almost the same kind of pattern, where you see like 5 or 7 days ago, it was a peak up there around 7.12, and then has sold off sharply down here to under 6 and closed poorly. It has one additional support level here, about 5.5 in the Bollinger Band mean, but if that fails, then it's back down to this cluster, I would say about the RL90, about 4.7. So there's a lot of room for opportunity in this little, in that trade frame right there. The PSAR just flipped today, so my bias is certainly on the downside on that one tomorrow. I want to compare that to their run-in buddy Alcoa, which was actually up for the day. So when we look at Alcoa, we can see that it too had that peak 5 or 7 days ago when XLB was running amok and everything was right in the world. And this thing got smashed all the way down, but it's put in 5 days of recovery, basically following along where that old PSAR was. So in terms of easier to believe in, you can see that doji 2 days ago, and it worked on both sides of that box today. So I would still keep that box and then use that as my my intraday trade frame in either direction, and I'll be ready to go on either direction in Alcoa tomorrow. So I'm going to indicate that by showing. We can get this little, yeah, I'm ready to play that one in either direction. I kind of like that. I wish they would give me a little, an object where I could just paste that into all of them and have all of my little symbols easily available, but it's kind of a pain in the butt. So I'm ready to go in either direction on Alcoa, and I've shown you Cliff and U.S. Steel. Nucor is the last guy in that category that's of interest, and Nucor is the best looking one of them all. That's another kind of a large cap. That's twice the size of U.S. Steel, and it closed poorly like U.S. Steel did, but it has already recovered from its little moment of sell-off here, and it too experienced that nice push up about 7 days ago when materials were all the rage. So in terms of directionality, Nucor steel is easier to believe in. From a max pain range compression, U.S. Steel gives you far more opportunities for much larger moves in either direction. And at $8 a share, you can buy a boatload of those compared to buying these at 40. It just feels like it's easier. Their broad sector XLB for all the last four that we just looked at, the broad sector looks more like Nucor, right? So there's there was the big run up, 7 days ago. Here was that harsh sell off, and it's recovered. The sector has recovered nicely, so that the sector itself is actually even an easier way to play that, because now you can still see that there is a swing high to aim at there, and then on the downside, the sector offers at least the Bollinger Band mean, and then probably the 10-day low and fair value all down here around 52. So that XLB tomorrow to me looks like a very interesting sector to play. So that's my little logic diagram for finding those. Some other things got smashed. Our little buddies down here in Mexico and Brazil, EWW and EWZ. I'm going to go take a look at them on a swing. Now, I just got done saying that I don't have any swings, and that's true. I don't have any yet. But before I get a swing trade in, I'm going to be looking at the swing posture. And I actually like this one in EWW. Now that the froth has blown off, I'm always reluctant, to create swing trades when it's way up here, beyond Z2, pushing Z3. And that's exactly why. 3 days later, it had sold off almost 20%. And then you'll notice that there is this little support level in here that's held. The 10-day low, the Bollinger Band mean, it closed right above there, so it wouldn't take much more than that kind of a manageable risk box right here, which is probably, that looks to be about 50 cents. Yeah, that's about 50 cents right there. So any recovery down in that sector is going to be nice. And because it's a frog champion, I'll play that one in either direction. And then the upside target on this one is it's got to get through these layers of the dragon. I'm going to put 3 prices in for the dragon. And then the upside target is the peak of the dragon, and then the peak of the RL10 and the PSAR flip way up here. So there's plenty of room to the upside. Downside's also easy to see. I think it would come down and close that gap there. The Z1, belly of the dragon approximately there. Previous belly of the dragon right there. So there's lots of moves in either direction. I'll start that one as a intraday frog. And if it closes strongly in either direction, particularly if the market itself is powerful in the same direction that this thing goes, like if the market decides to fail tomorrow, then this will fail tomorrow. And then I will take that as a swing trade and start it off with gains that I make from the intraday turbo, and then I'll keep either 10 or 20% of that position if it's closing well. Now, if that's what EWW Mexico looks like, let's go take a look at Brazil. And Brazil is about in the same kind of condition here. And it just feels like if I just drew that box around yesterday, and see that's got most of the previous 5 or 6 days of support. You could see the dragon spine, skin, peak, or RL10, and the PSAR flip. But on the downside, this would be a reinforcement of breaks through I'm going to call it the 10-day low right there. Then the Bollinger Band mean. This little support level over here was the lowest price that it achieved in the last 20 days after that gap, and then this would be the price to close the gap, then Z1, RL90, belly of the RL10, or the dragon, excuse me, then belly of the RL10, and then all the way down here to Z-2. So lots of room for that to go in either direction. And the news out of Brazil has not been good, but it hasn't failed any further. So that's one that is ready to become a swing trade once that violates. So what I've done here is I've now created some hybrid trading plans. I'm going to start those as swing trades. As turbo trades intraday with the hybrid frog in the chain, and then try to make some bank on the turbo. And then with about 2 hours to go, I will take a look at the longer term, maybe a 30-minute chart or the daily charts, and see how things are shaping up. Probably the 30-minute chart. I'll make the decision off of that, and then decide if I want to keep 10 or 20% of any gains that I've made intraday and invest in an overnight swing trade, believing that if there's a strong finish, it will continue in the overnight trade in that direction, and that's the direction of the gap. Then I would be ready to trade the gap instantly. So if it starts giving back some of those overnight gains, then I'll trim it in the usual way. So that'll be my my 6 or 7 primary targets for tomorrow. I've already sorted out on the basis of taking a look at performance today, and then deriving from the market's condition what I think its contribution till tomorrow would be. I think tomorrow the market reinforces in some significant direction, because it's Friday, and there will be some kind of decisive move. And then I will probably only keep 10% rather than 20%, because tomorrow is Friday, and holding that over the weekend would be more dangerous. So I'm willing to hold it over the weekend if there's a decisive move tomorrow, but I'll only keep half the usual size. So I'll only keep 10%. So that means if I have something like 2,000 shares in Brazil, then I'd be willing to hold 200 shares over the weekend. Okay, so that's what that looks like. I want to take a look at some of the other movers. PBW, the clean energy, in pretty good shape right there. Tesla's back above 1,000. No fear in that one. I think you could own it. Microsoft, also in very good shape. That's a no-brainer right there. If there's any kind of recovery, that's going to benefit. And I think your stop would just be the PSAR. I think I'm just going to buy that tomorrow no matter what. Amazon's in great shape too. Taking a look at XLK, the tech sector's in great shape. So if you weren't sure which one of those to play, you could just say, well, let's just give me the sector, and then I will get a percentage interest in all of those other ones. Apple's the other tech leader we've been pimping. That's in good. So you can see right now that XLK is really representative of all those big tech leaders. Intel has been lagging a little bit compared to that. And then the precious metal play, Wheaton, has pulled back and given us a nice bi-directional trade here. So that's only, about 50 cents of risk in that yellow box. And there's still plenty of room to the upside around 45. And then if that collapses, it's got to break down through belly of the dragon, belly of the RL10, and then that's the least likely condition in my view. I think there's more risk to the downside, which would make Wheaton a better play. So I kind of like that. I think you're getting it before it's made its decisive run, and it's finding its support over here at a price level, this price level in here around 39-ish, is better than the previous support level back here at 28. And the last time it was locked into this price level here, it voted north. And it's pulled all the way back, but held support, didn't fail further at fair value. I think it's to the upside. I'm ready to play that one tomorrow too. Okay, so that's everything I wanted to cover on that. I want to do just a quick couple of little mini lessons here. So this one, in response to Ashok's question about, he was experiencing some discomfort with his interpretation of the supported spring crossing challenge. So that drove me to just specify chapter and verse exactly what I mean. So here's what I mean. In our little journey here as the walking man with the knowledge of the head, heart, gut, hands, and feet, making our way through these roundabouts on our way forward, there's a series of what I'm just gonna call them kata. And I'm going to define each and every one of those on a one-page sheet, just like I think we've defined the supported spring crossing. And the supported spring crossing is the first one to master. And that's going to be its own standalone course. It's going to be, what is the pattern? How do you prep and plan for it? What's the psychology that it takes to execute it? And then when you execute it, how do you assess? How do you learn from your assessment? And then how do you manage all of this going forward? Well, you manage it using the principles of Shingo and Kaizen in the Gemba, which is that continuous improvement with quality circles. And then this pattern is robust, whether you're using it on weekly and monthly charts for core, or daily and weekly for swing, or intraday as a day trader, or blending all of those into a hybrid pattern. This is the gateway drug to all of these other patterns and forms. Now, I taught all of these in the hybrid course, but maybe that was too much at once. And so I'm carving out just the standalone module of the supported spring crossing and showing you how to trade that and learn how to trade that in that challenge. The next logical one would be the supported fall crossing, so you can get the upside moves. And then the supported winter crossing would be the third kata to master, because if you get that, you'll just fall into the collapsing dragon. Because the collapsing dragon is such a shock, if you get a good sideways, a supported winter crossing, you don't even have to take the collapsing dragon, because the gains from that will be causing you to have a big win on SWC. So to me, this little triumvirate here of SSC, SFC, and SWC, those three then allow you to get these other pieces to the upside, the owl and the emerging dragon, to the downside, the collapsing dragon, and beyond. And at some point, when those directional moves stop, you get into this sequence of the sideways quiet channels, the Z3P, and the super pinch. Like, I'm going to tell you, don't even trade sideways quiet channels until they have compressed into the Z3P, because you don't have to, because there's so many of these other trade patterns that I think you can make a living off of these. The sideways quiet channel, the supported spring crossing, the fall crossing, the winter crossing, and then the Z3P. Those right there give you, the first three give you the directional patterns, all based off of price with respect to the dragon. That's why the dragon will teach you so much. And then when everything just quiets down, the Z3 pinch then gives you enough abnormal sideways quiet channel that it's worthwhile. Once you get the Z3 pinch down, you can backward trade that with the hybrid frog, because the hybrid frog acts just like a Z3 pinch. Just because it's at the start of the day, you get all that energy to pound. But those are the first four kata that I'm going to tell you that you should learn. And we're going to do a challenge room, a kata room for each one of those four. And when you master those four, I believe you will have mastered hybrid trading. Because once you see those patterns and you master them on the intraday trade, you'll have so much stick time that it will be a trivial, not trivial, but trivial. It'll be a trivial matter to get that applied to the swing and the core, because you'll be so used to making those decisions that you could look at 50 charts at the end of the day in the time that it takes you to manage just one of these intraday. And that's the relationship. That's why I teach you this on the 1 minute charts. The next mini course I want to teach you is this one. So this is going to be about where you end up going. Oops. Oh, that's right. It should have been a highlighter. So we want to simplify position sizing. Here's what you're going to notice after you've gone through all the kata. I shouldn't even tell you this until you've passed the kata and I can whisper the next secret. I won't do that. So let's say that we have our standard pattern, and what I've shown you here is the supported spring crossing. So we've noticed that price. We've noticed that price has moved down in the form of the RL10 and given us a harsh winter. That winter has rolled over. And then that little baby dragon gets crossed. And he warns us that winter is about ready to become spring. There it was. Winter became spring. It warns us that RL10 is just about ready to cross the dragon pretty soon, and there it did. And it's telling you that the PSAR is about ready to flip, and there it is. So when we get our entry in this space right here, our standard practice for establishing the initial risk, that X risk, execution risk, is from our entry down to that PSAR, which always comes over and connects to where that RL10 switched over because of math, right? So this red line is our key price. Why is that key? It's key because it tells you the hypothesis was invalidated. The hypothesis was invalidated. This thing did not go higher, it went lower. And then this is going to be a CD to the downside once you get out to that kata. That's easy. That's my favorite pattern of all. So now what we're looking at is the execution R. So now if you've been playing along at home and you've been doing the DIA and the EWZ, you've noticed this phenomenon over here. Sometimes that thing might be 0.3 and the next time it's 0.3, then it's a little wider, it's 0.4. And sometimes around lunch, it could be a 0.2 or a 0.1. Well, if you just apply math, let's say that when I'm up at production level and I'm risking $300, and let's say on these first two, I was using 0.3, and I took my execution risk, and I just divided 0.3 into 300, I could buy 1,000 shares, right? Luke, is that correct? Could I buy 1,000 shares based on that math? $300 risk per trade. That's incorrect, Luke. Why? Because the execution risk, I was just setting you up for failure. That wasn't fair. Execution risk, 5 times the execution risk equals the position sizing risk. So if my execution risk is 0.3, I have to multiply that by 5. $1.50 is my position sizing risk. Then I can take 300, divide it by 1.5, and I can buy 200 shares. I think that's right. Yeah, 200 shares. So that keeps you from blowing up. My point is that when you get all of this variation inside the same day, if I do all that math, those first two times I would have 200 shares and then 200 shares. This time I'd have something like, I'm going to guess, approximately 150 shares. Yeah. At point 2, I might have 300 shares. At point 1, I could have 600 shares. So this is the opposite of standardization. And I'm telling you, if we get to a simplify, once you get up into production, as you start proving yourself that you can capture execution R, and you start scaling up, here's what I would tell you. If I was looking at this, and what I would want to do is I would say if the average ones were like 0.3, 0.3, 0.4, 0.2, and 0.1, I might just say, you know what, it looks like 0.3 is kind of the standard most of the time. It's right in the middle. You know, the widest it ever was 0.4, and then it had 0.3, 0.3, 0.2, 0.1. I might just say, let me pick 0.3 as my standard. And if you traded that thing all week and you discovered 0.3 was about right, you might say, hey, for the next week, when I'm trading that thing in production, I'm going to use 0.3, multiply that by 5 to come up with $1.50, divide it into my 300 risk per share, and I'm just going to trade a standard lot of 200 shares. And then sometimes, if this was 0.4, I might just look and see, man, how do I get a smaller position? Maybe I'll just take 50 shares off so that if it moves a full 0.8 against me, or I might just move my stop to here and use a dollar figure. Or, so like in this case, instead of 200 shares, I might just use 100 shares in order to experience the full 0.8 execution. So in my view, once you get up into production, to simplify your life, if you just say, look, I've got a certain number of poker chips that I'm going to play in a standard way on EWZ, and I'm just going to, this week, I'm going to trade 200. Not only you can still compute based on execution risk and reward, but in the more important standardization of dollar lost, you will have protected yourself against those times when, here's the time that you're really trying to protect yourself with. Let me show you. You want to protect yourself when your entry was here and your position sizing PSAR was really small. So I'm going to draw that as your little risk box. Like if that was a really small risk box and it was only 0.1, and all the other times, the last 10 times you traded that, the risk box, the PSAR flips when they occurred were always down around here, and your position size or your execution risk would have normally been 0.3. When this thing is at its minimum, that means the amount of loss it takes, the amount of loss that it takes, to kick you out of the position is at its minimum. You don't want that to be your max position size. That's the time when you are most expecting to fail and take a 1 execution risk. So just once we get out of this kata room and you start scaling up, see, the kata room is what gives you enough confidence in your skills that you can follow the rules and execute. When you start getting into production, you're adding an entirely new variable in here. And that's an opportunity for the chimp to start screwing with all of the confidence that you built back there. But by the time you graduate from the kata room into the production room, you will have accumulated a whole box full. Inside this box will all been it was 0.3 and 0.3 and 0.4 and 0.1. So we're just going to standardize on that one. You're going to standardize and take a conservative, maybe it's 0.3, and then use that so that your position size is based off of 5 times maybe something like the average execution risk. What a novel idea that is. What that will do is ensure that when you start practicing with skin in the game and not just the 1 share or the 2 shares, but now you're starting to get up there in multiples of hundreds of shares, that you're not letting the intrusion of dollars to upset the confidence that you earned the hard way in the kata room. The kata tells you that you can execute this thing correctly. There's like 4 important judgments that we have to separate in our mind. The first one is we got to have good rules. I want you to just take as a placeholder right now that I'm giving you the rules for the SSC. So you don't have any ego involved. There is no ego. If this is your ego, which comes from the chimp, you have no ego involved in the selection of the rules. I'm providing you. If those rules don't work, I'm the idiot, not you. And you get to feel superior because you prove that those rules don't work. All right, so I'm giving you that as a gift. So you don't got to worry about, are the rules any good? All you do is, can you execute rules? Can you execute simple rules flawlessly? That's what the kata is. Can you execute rules correctly? Now, once you get past that, we can now start talking about confidence. And this rule is, how much confidence does that data set give me? What's the dollars at risk as an asset allocation decision? This is an asset allocation decision. How many dollars can I put onto there with confidence based on the evidence that came out of the kata room? So the fourth one is, now how do I ensure that I use the principles of high reliability organizations to protect against chaos? A chaos is a complex adaptive system, which is the market. It's the fat tail event. What I got to make sure is that I have protection so that when fat tail events occur, my rules allow me to trade between -1 and +2 professionally so that I can get enough opportunities to get the expectancy of that system. When I get outsized gains, all I do is I treat them as 2R. I don't lose my mind and say, God, how amazing I am. That's something that happened outside of the rule set, and we'll gather that. The rules that I'm giving you for protection against disaster ensure that you're not taking these losses greater than 1 position sizing R. So once you master the kata on a good enough set of rules, you will have enough evidence to say, yeah, these are good enough rules, and I'm good enough at executing good enough rules that I can now start trading this with confidence with money. And then by using the principles of HRO to study the histogram and the data set, I can start making asset allocation decisions on the basis of studying the histogram. And now I can start scaling the dollars up using the same architecture, the same rule sets. All I have to do is increase the number of dollars at risk, and I can keep all of the trade geometry and algorithms correct. So that's what this pathway of the supported spring crossing gives you. And then once you learn how to manage the kata for the supported spring crossing, you can start building on that with the supported fall crossing, the winter crossing, the Z3P, and now you have a hybrid trading set of patterns that you can then decide where in that whole array of patterns, all those standard plays, and then you can use those not just in day trading, but in swing trading, in core. And then your hybrid trading concept is to figure out what is the percentage of money that I want to manage in each side of those little buckets. All of that is standard patterns, prepared and planned in the usual way, bulletproof psychology to protect you against all of the chaos that the world's going to throw at you, and in all of the reactions of your chimpanzee when he encounters chaos. And then we're going to use this Kaizen and Gemba and Shingo approach to govern our assessments, learning, and management, and then we can survive and thrive. All of that is based on your ability. I'm not even asking you to invent good rules yet. I'm asking you to take a good enough set of rules and demonstrate that you can execute flawlessly. Once you can do that, you will have a data set that allows you to start fine-tuning the rules so that when you start putting skin in the game, that you will have the confidence that your adaptation of those rules are well suited for you. And then you don't have to take my word for it. You will have the data and the evidence of your own trading to make the adaptations to take the supported spring crossing plus your addition to it. And then those are your rules. Then the principles of high reliability organizations will help us and help you to continue to refine those rules based on your data set and your performance. So I want to go back to what Ashok said. He said, I start the day with a lot of confidence, but I'm trading it on 5-minute charts, and then I go down and look at the 1-minute charts, and then I override and I start chimping around. Well, dude, you are not even doing the supported spring crossing challenge. The kata is absolutely clear. The kata says that there's only one way to perform that thing correctly. See if I can pull that thing up. And thank you for your courage and being a brave. Oh, why isn't that opening? Because it's in this one. So when I started trading the SSC challenge, I'm trading in a 5-minute time frame. Stop. That's not the SSC challenge. In the SSC challenge, you're trading DIA and EWZ only on 1-minute charts only. You've set up the parameters, etc. And the reason for that is I want you to just follow the rules first. Because if you won't follow my rules, you're not going to follow your rules. Because for whatever reason, you have some confidence in the rules that I give you. Not enough confidence to follow them the way I've asked you to do them. But I take that as my fault for not being clear exactly what I want you to do. So that's me being a poor teacher. So when you, in the future, you could decide to trade on 5-minute frames. If you do, and you're trading the SSE, stay with that frame. Frame your trade on 5 minutes and then trade the frame on 5 minutes. Don't change the frame and make rules about how to adjust it on a time frame where you haven't made the frame. If you're going to make your decisions on 1 minute price action, go frame it on 1 minute charts. So that's why I say to pass the supported spring crossing challenge, you must demonstrate the following kata. Trade those two symbols only on 1 minute charts, set up your parameters correctly, identify the correct site picture, mark your entry with a green circle, mark your initial risk box in yellow, use the PSAR as a trailing stop until it hits the Bollinger Band mean, and then use the Bollinger Band mean. If you have 2 execution R in hand, you may elect to take a sniper exit because it's just worthwhile to learn it. Mark your exits with a red dot. Identify the max favorable excursion with a pale blue dot, etc. Just go all the way through those instructions. So some other things. You asked me some important questions that go, how do I develop patience and confidence? Well, you improve patience by sitting quietly and doing nothing until it's time to act so that you're well rested, then act. To improve your confidence, do the following. Get rid of it. Replace confidence with a commitment to perform the kata with correct intention. So don't be confident about the trade. I'm not confident about those trades. Reflect on these. I am not confident in the pattern when I trade it. I am confident that I will follow the rules exactly, and I'm confident that I will include those results in the histogram of the for that pattern's performance. I'm confident that I can assign a proper level of risk capital to the trading of the pattern. I don't have any confidence in the pattern. It's what I do with it that I have confidence in it, and that's what I'm going to commit to. And the reason is that my fireman, that part of me, is stronger, smarter, and braver than the chimp. That's got to be true. The fireman's job is to save me from the entry that I just made and get me to no lose plus dinner for 2. When he's done that, he escorts the chimp back to the firehouse where he prepares for the next life-saving mission. Once the fireman has done his job, the manager and sniper take over, and they manage the exit according to the rules. And when they've exited, the accountant scores the trade, and then the caretaker, also known as a doc or medic, he comforts the manager and the sniper and prepares them for the next trade to manage. So there's no confidence in there at all associated with the pattern. All the confidence is what to do with the results of the pattern, how much risk to put on that pattern, how to learn from that results histogram of when I should be adapting the rules for the pattern. I have no confidence in the pattern. In fact, confidence that this thing is going to work is an error. I have no confidence. In fact, I have such unconfidence that when it comes time to take the exit, especially right after the open and it's a collapsing dragon, I actually love it. So I don't have any confidence in the pattern. I have confidence in the process that I'm going to follow to make good decisions on the basis of data. I'm confident I'm going to follow the rules exactly. That is such an important point. I wanted to make that point. Okay? Now, you asked me some other things. How do I develop confidence in patients and the psychology and all that other stuff? I'll tell you, after you complete the kata, then take the psychological lessons I prepared for you in the psychology course, in the hybrid trading course. There's one course in there that is devoted to nothing but psychological exercises that will help you with typical challenges that come from trading correctly. Even when you trade according to your rules, there are some psychological stresses to contend with. Until you master the kata, there's no point in even taking those because you don't have your own trading process under control enough that the psychological lessons can work. You have to have enough discipline and control of your behavior, of your decision making, so that the psychology gives you something that you can work with. You can't use psychological lessons on a chimpanzee. He understands one thing, banana and stick, or something like that. So the way you get that monkey mind under control is by sitting quietly and doing nothing until it's time to act and follow in those rules. Then and only then will those other psychological lessons give you the baseline to improve on. That is more important than the particular lessons of that pattern, although the particular lessons matter because you got to execute them correctly. But that insight there is more important than a technical adjustment to the rule set after you have evidence. Here's something that you're going to notice. Once your ego is out of the game, because all you got to do is execute the rules correctly, you will realize that there's none of your ego associated with being right or wrong about selecting the rules. I've removed that from you. You don't have that responsibility. That is going to allow you to take those trades at a much lower cognitive cost. The psychic distress about being right or wrong doesn't matter to you then, because all you got to do is execute correctly. And then you're going to notice something when you start trading this with 2 shares live going forward. You've got $2 at risk. Notice that you will have a different feeling about executing correctly, even though you've only got $2 or 2 shares at risk. When you have skin in the game, if you're a mammal, it will be different than paper trading or even trading on the simulator. So you should notice how much difference there was between trading with 0 skin in the game and 2 shares worth of skin in the game. And it's 2 shares so that you can have the manager execute one and the sniper execute one. Because by that time, it's worth it to start training your sniper with live ammunition. Once you start doing that, notice the difference in psychology. And then, is it the dollars at risk that are causing the extra cognitive distress? Or is it the fact that you're trading live and have to be right now that you've mastered the kata and you're ready to do this other stuff? Is it you feeling like you have to be right again? So look for those re-entries of the chimpanzee into your psychology so that you know how to contend with it. Item number 20 in the SSC challenge is the owl meditation. When you get done with all of this stuff, at the end of each day, do the owl meditation for gratitude and forgiveness. Where's the owl meditation, Ken? Look it up in Campfire. Go to Campfire or Basecamp and use the search function for owl meditation. You'll find the file and you will have answered your own question. It's all over the place. It's one page. There's even a lesson on that in all of the learning management systems. When you can do the SSC kata error-free 5 days in a row, then you're ready to do the 2 shares. You'll make your decision when you're ready to do that, but that's officially what that is. So that's what I want to say about that stuff. So onward to the feedback sessions, because we're an hour into this thing. Quick feedback. So this is for Antonio. Here's what I'm going to tell you, Antonio. This was part of the SSC challenge. Here's what I want you to do when you listen to this. Choosing the pen color. All right, I want you to notice how much unused space there is up here. Because you are using the color-coded MACD 4 Seasons on the RL10, you can shrink this down a lot. And then the upper limit of your screen should be up in here. So now you will double the size of your window into price action by shrinking that part of the window and this part of the window here. Shrink that so that you can expand the area in question. So you're not trying to look through a microscope and for fine tuning. And then I'm going to tell you, turn your candlesticks to bars so you're not distracted by the red and the green. You've got 2 different PSARs on here. So pick the correct one off the RL10 and then I guess it's the black PSAR, use that one. And that black PSAR is pointing at the moving RL10. Get rid of the average 20 and the simple move. There's too much crap on there. Everything else looks correct. This is correct. What I want you to do is on your markups, make your yellow box for your initial risk. That yellow box is your execution risk. And then whatever your final, let's see, your final tally, let's say it was a winning trade, this would be a green box. And then draw a blue box that shows the maximum favorable excursion. That tells you from the moment of maximum gain how much you gave back. Studying the blue box visually is going to give you ideas on how to train the sniper. So make that a standard part of your markup, and then you'll never forget that. This is a good reentry. Good sniper exit, which was better than the PSAR, so good. I don't mind this reentry and this exit, which are fine, because then you tried it here, and it's another little fractional, so those are fractionals. But I'm then going to say that's the one you got to take, because that's the one that pays you. And then instead of being a minus 0.4, that thing will be plus 0.8, because you won't take that one, because you will have taken this one. And then you exit in the correct way. Once you get skilled at this and you get your supported fall crossing and supported winter crossing, you're going to get paid huge on a down day. This one, yeah, that looks correct. You're going to get in the habit of watching that maximum favorable excursion, and then you're going to see you have plus X number of dollars. And if no lose plus dinner for 2 is ever $100 for you, and you saw at some point you had $200 and you're watching that, you'll never let it go below 100. That's just what's going to happen to you later in your life. guaranteed. So not bad. Just make some adjustments. This is, I recognize Gerald's charts. Now, just from an artistic value perspective, notice the difference in this chart when we're trying to study what's really going on compared to the last chart. Notice that we have a lot of room to study price action here. This could be even smaller because you've got the price action coded. I like this is good practice here, especially on a day where the market has gapped down. He has just enough of yesterday's price on there to show you the relative size of the gap, but he doesn't need much more than that. So that actually minimizes all this. And then when this thing starts climbing out of the basement, you have a wide range of targetry to aim for. So we're going to come back to this thing at some point. So here's the harsh. Now remember, because of the gap down, we treat that as if that was just a giant red candle or a giant red bar. Notice how when you make the candles skinny black bars, they move to the background like spines. And you can concentrate on the thing that matters, which is the price of the RL10. So here's where the baby dragon is crossed, turns to spring, crosses. There's the PSAR flip. There's our sight picture, bang. Initial risk, he's opted for just keep that in place until he feels the PSAR has crossed above his entry over in here. Now he jumps to no lose plus dinner for two. Right in here, probably as this thing was closing, he noticed that it had taken out the previous high. So now he can tighten that thing up right there and get paid this much. And he leaves that in place until the Bollinger Band comes along, and now he just picks up the Bollinger Band. And now he's going to study how does it feel of the PSAR versus the Bollinger Band. The real difference was about this much. And I trust his judgment there. That's for him to sort out which one of that's really the wiggle room is the difference between those two things. This is a nice, reasonable entry. And this is the case where notice how tight that PSAR gets once we're beyond the initial surge of the day. This would have been the case where, even though that's like the execution R, once you're trading this thing at scale, you might have picked something where, hey, I'm going to use my standard risk box down here. I could still take that as the execution risk, but I'm not going to triple my size just because the PSAR is so close. You'll learn about that later. This one just helps you understand in the early stages how troublesome this can be. I love the exit here. And given this thing some room to travel, notice that he has given it room to travel. And that again, when the PSAR gets above his entry, is when he's chosen to jump it up and then locked in that gain. and gets a no lose plus dinner for two. Perfectly played. You gave this thing enough room. You were never at risk of losing more than a fraction of a position sizing anyway. And then his markup for the day is pretty nice. Now, you'll notice that what he's done is what I often do when I want to make these points, and that is that he's using half a day because now you can actually see enough of this. So you might actually want to have two charts, a morning and an afternoon session. Why is that useful? Because you're going to realize that there are two times during the day when you can expect some of those big directional moves. It almost looks like a barbell. You're going to notice, like if this was the open, that you're going to have a morning session where there's some big range, and then that collapses into some kind of quiet range around lunch. And then when it breaks out, you get another wide ranging day. So you might see a big move in the morning that locks into a tiny move at lunch, and then half that size in the afternoon, or half that size and reinforces. So if you just do one chart for this morning session like he's done, and then one chart for the afternoon session, you'll be able to view those as two different times of the day when you can expect volatility. And then you can make a decision, when do I really want to trade? Where am I really good? During the quietude of lunch, where the Z3Ps occur? Or do I prefer the opening shenanigans or the afternoon shenanigans? So really nice work here, Gerald. And you've given us news that we can use. DIA in the standard way, perfectly played. This is the one thing I'm going to highlight, that as you start, once you've passed the kata and you've decided to make the adjustment on your rules, one of, like, I guess maybe like a rule of thumb, a rule to consider is when you see a run that long, maybe that's the reasonable exit, and you keep another just tiny little. The real difference is not much anyway. I don't think that's enough difference to make a difference. The only time that might be the case is if this thing got really consolidated in the dragon. You don't want that. You don't want the stop to be the Bollinger Band mean, and then this was a great big sell-off candle. So it might be that that's good enough. But that's a nice tight execution. I would suggest that you do a net on this. So minus one, and this is plus 1.16. So the net is 0.16 for the day. And that's where that little fraction might actually be better psychologically. Then get in the habit of marking up the blue boxes and the green boxes, and that will start. That's how you will quickly train your sniper. Perfect and perfect needs no commentary. Correct and correct. You're also going to notice over in here the possibility of later on for future kata. One of the things that you notice on this when you're performing the kata is the limits of the rule set. See, what does that rule set not get? What does it reliably not get? Where are the reliable moves that it's not getting? And then you're going to realize, oh yeah, that's right. There is a supported winter crossing. You'll get that. and you'll learn to take that right there. Failure to fail further, you'll end up taking that one and get paid that entire chunk because you'll take a bird in the hand. That's a really nice exit. You'll get used to seeing that as that supported fall or supported winter crossing again. You might even ended up taking that one, and you'd probably get paid here because you saw the two bars came down, hit the VWAP, and started to reverse. You would get paid right there. You're going to learn how to get paid right there. And you'll start collecting all of those fractions and not even sweat it. You'll just hear the ringing of the cash register and say, yep, another satisfied customer. I'm holding out for the big win. Okay. Enjoy that. Supported fall crossing, second position collapsing dragon, reinforced 3, and then you'll end up taking that one. You will have gotten paid on a 3-bagger on that move. You're going to love that. See, this is my point here. Those execution R's are really tight. So you'll end up taking one execute. But if this thing had popped, then that would give you 1, 2 fulls, just if it gets back to the previous support level. And notice that if you're short here, and that's your execution risk, and you've got paid all the way down here, you got 1, 2, 3 execution R's on the first one. 1, 2, 3. 2 execution R's on the second one. 4, 5. 1 execution R on the third one. 6. That's once you get up there into blue and purple and brown belt. That's how you're going to end up trading that one. So more's coming. Patience, grasshopper. Let's see. Supported fall crossing. That's fine. That's fine. You'll make some decisions later that what I asked you to do on the written portion of this would have been have taken this stop. Here's your correct entry. There's a reason. Either one of those are reasonable exits. If that's one execution R, then these exits would be 1.0 execution R instead of the late entry. Just for the interest of kata, I'm going to just mark up all these things. Let me get to choose pen color red so you can see these. Supported fall, collapse, good exit, also long exits here for a fractional, supported fall crossing here, scratches. You don't get now when this is sloping down, that's not an entry. Here's an entry. That gets paid. You would exit here according to the rules, and then you will have noticed this giant give back of 5 minutes up running the Z3 line and then a 1, 2, 3, 4, 5. You're going to learn to take that probably at the edge right there. And then this would be a nice payoff. And then this is short if you're playing the sideways or the supported fall crossing. Entry, second position. I love that one. Love the exit. Would love this re-entry. Tight stop. Here's no lose plus dinner for 2, so you're going to get paid some little fraction. This is the one you love right here. After a lower high, then this one is the one you love. And you could reinforce here. This is a nice collapsing dragon. Great exit. This should be long. Probably scratches. That could be short. That gets you a little fractional gain. Then by this time, you know, this one trading in the last hour, that's really the last time you could take it. Anything after the last half hour, don't trade. This is, oh, I think we saw that one. Sorry. Talked about that one. This is nice. See, notice the difference when you have those bright red and green candles, how wide they are and how much they command your attention. That's where the confusion comes from. Luke asked, the RL10 crossing the baby dragon must be a front run for the WMB03 move, probably. Yeah. So just try it where you turn those to thin black lines so that you can really see the colors. Now notice how much harder it is when you have to come down here to look at the color to see what season I'm in. Makes the change right here. This is a good entry. Perfect exit. Well done. Notice how you're trading from the crossover to the crossover. Then when you get this choppy sideways crap, that's what the MACD looks like. And then it votes to the upside. That's very favorable. And notice how that happens in that big spike up. Yeah, I'm going to agree with you here. Not sure what you were thinking about. If you're going to take that trade, it's here, and then this is a scratch instead of minus 0.5. That's a reasonable um, supported fall crossing and collapsing dragon from here. This is a this would be, so that's a good cover. This is probably an opportunity to get long. I don't like I like the pen better. So this is probably an opportunity to get long in here. It's harder to tell. No, I can't see because we're just in the winter. So here's the spring right there. So I don't mind that entry. That's a pretty good entry. There's a nice stop, and that's the beauty of that the PSAR exit. So let's suppose you had taken the PSAR trail, and then here you picked up the Bollinger Band mean. Then this makes that a really nice sniper exit. But again, notice how much space is up here and how much space is down here. That makes all of this feel really compressed and hard to see. Then when you have the extra green and red colors on there, it becomes a lot harder to see what's going on inside these regions. This is just beautiful, and I love the sniper exit. That's good stuff. Well done and well done. That's 2.2. Hey, on down the road, when you've got 500 trades under your belt and you say, hey, Ken, I want to use 3 execution R equals 1 position sizing R. You'll be a grown person by then. You can do whatever you want. And this is a shock. This is what happens when you start not trading your frames. Okay? So, but if you were on a 5-minute, and if that one got you out because of reasons, because you wanted to make a little bank, especially after having experienced that much gain, I don't mind that as an exit, but you got to re-enter right here. And then this is your stop, and then just pick up the Bollinger Band mean. And then if you saw this big spike up, that's where I would accelerate to here, and then I'd probably just strike, and then you got the majority of that move. So stay with your trade frame. If it's 5 minutes, it's 5 minutes. But again, notice that all of this space in here is unused. It makes it a little bit trickier. But again, notice that when you're using black bars, it's easier to see the regression line as the driver of decision making. Don't hide your indicators. This was a thought experiment. I think I forget who did this now. This may have been Robert. I think Robert Hartley did this. Robert, are you here? I think Robert did this one. Yeah. And I want you to notice how important it is to the development of your lens, your warrior's eye, if I can say it that way. Because now you feel, oh, I had 1 unit of risk, 1 unit of gain, and I gave back this much. And now if it comes back here and I can start coming up, that should be an entry. So Robert, I don't know if you've got that tuned right. That should be an entry long, because this one would be an entry. When it flips, you're supposed to be short here with a risk box right here, and maybe you have that on there. But then it comes down here and then moves up, and the PSAR flips here. So that's an exit, and now you're long here, and now you get all of this gain. So this should be long. And basically you're trading in the direction that the PSAR indicates. But more importantly, I want you to realize, you'll start looking at the comparison on the winning trade. So how much I had and gave back versus how much I kept. and that'll drive you nuts. And then you'll learn when you start seeing these kinds of formations, these little turning points, you'll just say, screw it, I'm going to take that 1, 2, 3, 1, 2, 3, and take that. Instead of letting that become a loss, you'll end up getting a little gain in here. So add that blue box. Now, I don't know if that rule set's any good or even how efficient it is, but until you go beyond the edges of your structured rules, you start just experimenting and see what you can discover. That's how you learn new things, is by noodling around. So you've got to have a mode in which you noodle and a mode in which you are efficient and ruthless about production level. This looks like Luke. You probably would have scratched that, and then as long as you re-enter it, I'm good with it. Nice use of the PSAR and being relaxed, and off you go. Well done. Don't change a thing. You're trying to gather evidence to prove to your wife she's going to hold you to a higher standard than I will. Now, notice on this one, notice on Luke in his little dojo here, little ninja warrior that he is. That was the end of that trade, because that's the 2 and a nice exit. I'd even be tighter on this one. I wouldn't be offended if you had taken this one or this one, especially here. One of the things I notice in my own trading is when I get the second position on, I am much quicker to kill it, because I'm mindful of the fact that all of the gains from this first one, this second one is now eaten away. It's like my, younger brother eating your food. A high, a lower high, a lower high, perfect, and then beautiful, bang, and cover. Oh, ha! Keep doing that. Your wife will tell you when to stop doing that, okay? Fair enough? Shout out to the land of Oz. So far, so good. I respect the decision not to trade that, but just in terms of the pattern, that's the pattern. This is all good. Perfect. I don't mind trying this. It probably doesn't do much, but that's respectable. This is a reasonable entry. This little piece here where it goes green, blue, and then it tries and then fails right away. This little, where it doesn't even go up in order to fail, but just comes down kind of lazy sideways and fails. That might let you get this at the edge of the Bollinger Band just a little bit quicker than here, and then this really pays off. Okay. And maybe I'm reading that wrong. Maybe this was long here and then scratch. If so, this should be short and cover and then long and scratch. So Win is a good frog candidate for intraday. It does its own darn thing. I hope you guys don't mind me marking up these on your trades rather than just showing my trades. I think you'll learn more from these. You'll be the judge of that. Perfect. This is Joe's series of hourly charts. Oh, what a lovely exit. Sweet. 2 scoops, and it was rolling over, 1, 2, and hit it. Nice. He used a sniper exit instead of taking the PSAR. He kept a full execution risk by just saying enough is enough. There's my 2-to-1. How much more was I expecting on the long side in the sideways market? Cat, nothing to add here. This is one where I think I don't know if the green box is correct. Joe, let me see this. This is where I need you to draw those blue boxes so you can start locking in. This looks like a fractional loss, I think. I'm trying to figure out, is this the short? Probably. Should be. And then can't really tell. See, I can't really tell from there. This is a really good short. Then once you get this, I think you should be exiting here instead of waiting for all of this, because now I'm actually getting long here. I think. Yeah, because you're in the spring. Yeah. Making a little bit hard on me there, Joe. You're making me wonder. Make it easy for an old fat man. Apple perfection. Huh. And I like, again, he's using a sniper exit over here to take it when he can, right in the elbow. And so he exited right where the PSAR was flipping. That's nice practice. If you're going to do this, I think this is Steven. Do these in the just use DIA and EWZ for standard trading. I'm going to say, if I can here, I like the first one. That's good. This is way too soon. You do not have 2 execution R in hand. And that makes you take this exit because you're worried about losing a big loss on a double position. So that chases you out where the PSAR keeps you in. And imagine if you don't take that one and you don't take this, you would end up getting this entire move in a relaxed fashion. And then you would take this as a short and cash at 1, 2, 3 right here and stop and reverse and long. So I love that. You got so much going on in here, you were exhausted and couldn't take that trade. This is a good stop, a good exit. This is the supported crossing. And the reason that's nice is you have a high and a lower high. You made bank, but this is now the easy one to see. It doesn't pay off much, but that's the one you got to be ready for, because you have every reason to believe it's going to come down to this price level. I think that was this? No, this is a different one. Okay, so this is nice. I likes it. I might have stopped and reversed and then scratched, but then the long is perfect. Love the sniper exit, 1, 2, and done. And that stuff's out there past Z2, and then it's and done, especially after a nice long run on a choppy day like today. You cannot get better than that. And then zero state, bang, got it, cover it, stop and reverse, scratch it, and then the rest of it is normal. Then what I want you to do is put a net for the chart. So you had 4 or 5 in here. Put a net in here so you can see what the deliverable for that all of the tickets were. And gentlemen, that's that. That's an hour and 45 minutes. Reasonable stuff.